Hi guys, thanks for tuning in to another episode of Nuggets News. Today we're here with a special guest that we've been waiting to have on for a while. I think I missed Mike once and he missed me, but we're finally doing it. So I'm super stoked to have you on, Mike. I've been waiting for this chat for years, so thanks for joining us.
I'm excited.
For those of you that don't know Mike Novogratz, you probably would have heard of Galaxy Digital. He's right into crypto. We're going to talk about the investments he's made, his story about how he first got into Ethereum, which I fell in love with when I heard this story. And Mike, for those of you people that haven't followed you at all, do you want to just give them the short version of, I guess, your background and upbringing, so like investing?
Sure. I was a Army helicopter pilot. After college, I was an RTC guy and spent some time in the Army. And my first job, real job, was at Goldman Sachs. And I spent 11 years at Goldman Sachs. I was a macro investor by the end. Excuse me. And, macro investors look at trends, they look at politics and economics and try to sort the world out. I left Goldman, or it left me maybe, and went to Fortress Investments, where I ran a big macro hedge fund. At one point, it was a $9 billion hedge fund. We were the first alternative asset manager to ever go public. And so that was really fun. We're the only company where five guys became a billionaire in a day. To this day, I don't think even Google didn't do that. So that was just, it was kind of a heady ride. Of course, like all good things, it went up and it went down. And sometimes towards the tail end of my career at Fortress, I got a call from a friend of mine who asked me about Bitcoin, and I never heard of it. He had moved out to the West Coast. Everyone was talking about Bitcoin. And so I did 15 minutes of research and was like, cool technology. Libertarians like it. This was in 2012. We were in the European financial crisis. The Chinese were buying it, and I was like, it's going to go higher. And so my first buys of Bitcoin were about $95, and they were very speculative. I bought it because I thought it would go up. And as I started looking at it and digging in, I thought this could be cool. And so I called a friend of mine named Dan Moorhead from Pantera, who I had invested with when he ran a macro fund a few years earlier. I helped seed his macro fund. And I knew he was sitting on the sidelines. And I said, Moorhead, take a look at this. I don't have enough time. And after 2 weeks, he called me back and said, dude, this is going to change the world for this, and this reason. Coolest thing I found. Thanks so much. And so we decided, Pete Brigger, my other partner at Fortress, myself and Dan, that we would buy a bunch of Bitcoin. And to Dan's credit, he bought a lot. We were a lot richer than Dan at the time. And so he bought a lot of Bitcoin, about 30,000 Bitcoin for himself. And so we were like, I'll have 30,001 because we couldn't let him have more than we had. So we roughly all bought the same amount and started, taking it more seriously. I made the mistake of talking about it publicly. I say mistake because I didn't know the press was there. And on the next day, I was on the cover of the Financial Times. The only time I was on the cover of the Financial Times. Fortress's Novogratz says Bitcoin going to 1,000. And to me, it was pretty clear why it was going to go from 100 to 1,000. And it did. It went to like 1,100, and then the Chinese put some restrictions, and it went down to 400 and bounced and went down to 200. And so I actually wanted to sell it at 1,000. And that had been my plan, to sell it and buy a jet.
Yeah.
Right? You buy 30,000, it goes from 100 to, you made $30 million, you sell it, you pay your tax, you buy a jet, and you're laughing for the rest of your life. And my partner, Brigger, wouldn't let me. And he was so adamant, he actually went out and bought Bitcoin for Fortress's balance sheet. And all of a sudden, the company's buying, as a principal, can't be selling. So I was like, Pete, he's like, I'm doing you a favor. That, this is going to go so much higher. We don't want to sell it ever. And I was like, how did the distressed debt guy become a literally crypto maniac? But he had, and part of that was the West Coast. And so, speed up the story. I left Fortress in 2015. When you leave any company, you're clean yourself off and you look at your own portfolio. And what I found is when you work at Goldman Sachs, you care about your job. You don't care about your own portfolio. When you work at Fortress, you care about your hedge fund. You don't care about your own portfolio. And so, but when you're working for yourself, all you got is your own portfolio. So I started looking and I was like, shit, I got this Bitcoin, I got these venture investments, we bought part of Bitstamp. And I was like, Joe Lubin. Joe Lubin was one of my college roommates, and he knew a lot about crypto. And so I decided to go over to Brooklyn to see Lubin, and was just blown away by the fact that he actually had 25 people working for him. He had been a great friend for years.
This what year is this by this stage?
This is 15,
Yeah.
end of 15. And he had just been started Consensus, which is this ecosystem company. And Joe was always loner's not the right word because he's social, but he always was doing a small project here, small project. He was way ahead of himself in everything. He was into longevity in 1988. Now everyone's talking longevity. He was literally 30 years ahead of longevity. He was into AI music in 1991. And so, but he had never really put it all together. And so to see him running a business of 25 people blew me away. And what inspired me, quite frankly, was they were aggressive, they were young, they were kind of mapping out this revolution. And it was the first time I really understood the passion of this community. Bitcoin had been a speculation in 2012, 13, 14. Yeah. And now I understood that this was really a decentralized revolution. We were going to remake the music business. We were going to remake the financial services industry. We were going to remake title insurance. We were going to disrupt everything. And I was so moved that I was like, Joe, how much faster could you grow Consensus if I gave you a bunch of money? And I talked about buying 25% of the company. And in classic Joe fashion, I said, well, write down what the company is. And he said, oh, that's going to take me a month. It's decentralized. We're just getting started. And no one knows exactly, this guy owns part of this and part of this, and it's all in smart contracts. And so I was at least intelligent enough to say, I'm not leaving until I buy some of the ethers.
Yeah.
And Ether was trading about 95 cents. It wasn't easy to buy back then.
Yeah.
There were some exchanges, but it was illegal if you're a New Yorker to buy it on an exchange because you could only buy on regulated exchanges, yada, yada, yada. And so my first Ether I actually bought from Vitalik. I called him up. I had met him once at a dinner. He remembered me, but didn't know me. But they thought it was good for the community to have a Wall Street guy buying. And so I bought 500,000 Ether at 99 cents maybe, or 98 cents. He changed the price of me at the last minute from 98 to 99 because I'd waited too long and the price was going up.
Yeah.
And then I really became much more of a crypto maniac. And that first year, ETH went up to 20, came back down to 8. There was the whole
the DAO hack.
The DAO hack. I had a lot of fun trading the DAO hack. Buying it, selling it, buying it, selling it. I had a young guy named Jonathan West who worked for me. And the two of us literally were just having a lot of fun working out of my house. And then, I started an office, a family office at the January of that next year, and took myself more seriously and was like, wow, this crypto thing's going to be real. And between speaking at conferences and thinking more about it, I saw lots of good deals, and mostly I was lucky enough to be wealthy already. And so when you're wealthy already and you buy a bunch of something that's working, you don't feel that tremendous need to sell. I sold some, of course.
Yeah.
But I remember speaking at the first Ethereum conference.
Yeah.
And we were trading about 75 or 80. And I said, raise your hand if you bought Ethereum under 10. And almost all the hands went up because it was really an insiders conference.
Yeah.
I said, raise your hand if you still own it. And 2/3 of the hands went down. And I gave this speech about the pain of the gain, that when you're on the right trade, you just got to, the great fortunes of the world are made in trend. Yeah. You think about Jeff Bezos or, Bill Gates or Elon Musk, right? He's not selling constantly his Tesla shares. And I said, it's really painful. You got to handcuff yourself to the chair. By the end of my speech, Ether had gone from like 80 to 100. It was 130 the next day. And I started selling. I was like, I just told people not to sell, but it's really hard. But that's kind of my story. And then I always tell people, when you start making a lot of money in something, you get much more interested in it. And so, I dug in. And I feel like I'm the second oldest man in crypto. I think that John McCaffrey's older than me. Long answer. Sorry about that, but that was
No,
my.
that's great, Mike. And yeah, don't mind me if I mute my mic. It's just that we don't want the dog in the background, mate. Working from home. So I think just quickly before we dive right into all the crypto stuff, just to give people a little bit of context, what did you mean by alternate investments? Like, and how common was that at the time? You know, what sort of things were you getting pitched compared to now when it's all about these private equities and alternate investments? And, you know, what was that like and how were you guys pioneers?
We were relative pioneers. Well, we were pioneers in the fact that we thought if you put a hedge fund, a private equity fund, and a credit fund together, 1 + 1 + 1 would equal 10. That you could create a business. And we went first at Fortress, and then Blackstone and KKR and Carlyle all took their companies public.
Yeah.
You know, alternative investments are, alpha products as opposed to just being long the stocks or long the bonds or long commodities, long short or buying distressed credit, things that normal people don't have have access to. In some ways, it's the anathema to crypto, right? Crypto is this decentralization of finance. It's a democracy of finance, right? Why should only rich people be able to invest in the single best investors, right? Stan Druckenmiller only took the wealthiest investors in the world to manage money for. Mom and pop couldn't give Stan Druckenmiller money. Same thing with our hedge funds. And so we got paid huge fees to manage money. I used to make 3% management fee and 25% of the profits on an $8 billion hedge fund. That is a pretty good living. Now you've got to be good. Once you screw up, the market hammers you. And so I screwed up in 2008 and then again in 2015. And your investors don't like when you lose when they're paying you that much.
Yeah. It's, I don't know, when you say screw up, a lot of people screwed up in 2008. That's when I lost a heap of money. It was the first time I'd really got into investing. I was 21. Parents gave me some shares, and mum and dad lost half their retirement. I lost half of my little portfolio, and I said, "Do we pay these guys to lose half our money?" And they said, "Yeah." And that's when I thought, I reckon I can do a better job than that. So I went down the investing rabbit hole, and that became more of a passion than pharmacy, really.
Well, one of my favorite stories about DeFi. When I first started, thinking about Wall Street, I started reading books, and the single best book that every single crypto investor should read, every single financial markets investor should read, is called Reminiscence of a Stock Operator, written in 1931. And it's this autobiographical fiction book. It's written as fiction, but it's really a biography.
I'm familiar with it. I haven't read it though. Yeah.
You have to read it, and it's literally the Bible for traders. The second book is called Where Are the Customers' Yachts? Hey, that's JP Morgan's yacht. Oh, that's Merrill Lynch's yacht. The young guy says, where are the customers' yachts? And everybody laughs. The financial services industry makes a lot of money from mom and dad, from, fees, from transactions, from service fees. And so I always been telling politicians recently, I was like, dude, you need to embrace crypto. You need to embrace DeFi. This is a democratization of finance. It's insanity that when I go to an ATM in New York City or in Sydney or wherever, they charge me $2 or $3.50 to take out. Now, luckily, I usually take out a lot of money because I love having cash, even though I'm a crypto guy. But if you're not as wealthy, you take out $30 and they charge you $3, you're taking a 10% service charge.
Yeah.
That's literally robbery. And I think politicians are starting to get it. Forget trading fees and servicing fees. And so I think as we move forward in the next 10 years to, peer-to-peer, blockchain-based execution systems, selling insurance or writing insurance or derivatives, or you're going to really see the banks just get, they're not going to be saying we're the customer's yachts anymore.
Exactly.
They're not going to have yachts themselves.
And that's already started just recently. You can tell. And it's funny, in Australia last week we went down the same path as the rest of the world. I don't know if you followed the story, but our central banker has always said QE's bad, low rates, negative rates bad. And then last week he backflipped. Like, you remember when Jerome Powell backflipped?
Oh yeah.
Yeah, our central bank head backflipped last week, and he's gone against everything he's always said. And And I think one of our senators hammered the deputy head of our central bank last week, and it was really good to see because these guys just don't get pitched hard questions.
Who's the deputy these days?
Guy DeBell,
I know Guy very well. He's been
do
a
you?
friend for years.
Well, I might send you
Figured
this
it.
clip of one of the senators saying, you guys said this and now you're doing this. So anyway, I also like the point you raised about holding on to your winners. And you've got to learn these lessons. So I'd had a flutter in gold and silver stocks, and they're volatile and they go up and down. So you're kind of used to the movement. And there's a company, have you heard of Bellamy's Organic Baby Food in Australia?
I have not.
Tiny
My
little
kids my kids are old.
tiny little organic baby food in Tasmania where I live. And we bought them at ICRPO, and I remember selling it $3. It went from $1 to 3, and then it went to 15. And so you got to learn those lessons about selling too early. And I was at the other end of the spectrum. You'd made your money. I was a poor uni student. So I could only afford, maybe 30 Bitcoin at the time when they were $10, and I'd convince my dad to buy one for one each time I bought one. But I was at the other end of the spectrum. I was too poor, so it was not enough money. It didn't matter, so I was holding on to it for as long as I could. But definitely that Ether run, that was probably the one of the most exciting periods, I reckon, in crypto. When the DAO hack
Well,
happened,
let me tell you, in all markets,
in all markets, yeah.
there are very, very few assets that are 1,000 baggers, right? You bought it at one and it went to 1,300. I actually was selling some of my original $1 buys at 1,200, and I was thinking to myself, because the accounting we were doing, last in, first out, or
Yeah.
whatever that is. You're trying to hold on just from a tax basis to your low basis stuff.
Yeah.
And I was thinking to myself, I can't think of many other things in life. Like a 10 to 1's a great trade, 100 to 1's a great trade,
Yeah.
but 1,000 to 1.
No, absolutely, and just the, as you say, the story and the DAO and everyone, the Bitcoin maximalists sort of like bashing on it, and then it pulled through, and then it does 1,000x. That was just one of the most exciting times ever. But so let's just rewind a little bit. So the Joe Lubin story. I want you to tell that story for the people at home. When you walked in that room, Joe Lubin had 25 people working for him, but you did a speech. It wasn't ethereal. I think it was the following year, called "The Herd is Coming," and you spoke about just that electricity in the air. And it wasn't, you would have seen startups and you would have been pitched plenty of times. But what was it, that magic in the air, that you thought this is different?
That these people were unbelievably passionate. This was bigger than a markets thing. This was like a religion. And, listen, Joe, who's been a dear friend for a long time, when Ethereum was going up, I would call him and say, dude, I'm your friend. You should sell some. He was like, it's not about the money for me.
Yeah.
Then it was at 500. I was like, dude, you really should sell some. And, he would sell what he needed to run his business. But it really isn't about the money for Joe. He's a futurist, a scientist, a builder. I'm a speculator and a finance guy. And so I sold almost all my Ethereum in that run because I thought this is a wild speculative market, right? Great bull markets, great bubbles happen around things that later on do change the world. That the story is so powerful that you get these manias. And I kept predicting, I said, this is going to be one of the great manias of all time. And we had the 2017 mania where everything went up. You get pitched a coin, it's up 50x the next week. You can't have that kind of a supply response in any market without, at one point, prices collapsing.
Oh, yeah.
And so you had this immense supply response. You had no regulation. The regulators hit the brakes. And then we had the 98% death spiral. And quite frankly, the experience of being a macro hedge fund investor, the experience of having been in Asia in 97 and, the US in 99 and then in 01 and then in 08 really helped. And so I sold a ton. And part of it, I had made so much money. I was like, I want to buy this. I want to, I was, at one point, enough's enough. I think 4 years later, or 3.5 years later, we're in a very, very different place.
Yeah.
That this run is being fueled by real buyers who have thought this thing out, that there's a giant differentiation amongst the different cryptos. There's not Paris Hilton coin that's worth, anything anymore, though I like Paris Hilton. Or Sugar Ray coin.
Yeah.
Bitcoin has a lane as a store of value, as a macro asset in people's portfolios. Digital gold, that's the lane it's in.
Mm.
It's got a $280 billion market cap. Gold's at 12 trillion. What stops it from being 10% of gold, which puts it at 65,000?
Yeah.
That seems easy. It
Oh,
really
yeah.
seems easy. It seems easy in the next few years.
Absolutely.
You saw Stan Druckenmiller, who is, he's the god of macro. Like, I've
Exactly.
known Stan for 30 years, and he is one of the hardest working, most generous, most disciplined investors. His track record is breathtaking,
Has he
right?
lost that track record this year? Is it still
Uh,
30 years without a down quarter? Something like
30
that.
year, 30 years on a down year. He's had
Without,
down quarters.
okay, without a down year. Yeah.
Yeah, yeah. And listen, Sharpe ratio, which is your volatility adjusted P&L, is important for young guys. I look at their daily Sharpe ratio. But once you've made me money 3 years in a row, I might look at your quarterly Sharpe ratio. When you've made money for 30 years, you're looking at annual Sharpe ratio,
Yeah.
right? You can pretty much bet this guy's the world class. He might be the best investor of the last 50 years. And for him, and I try to get him into Bitcoin early, and no, I got not enough liquidity, bullshit. And for him to now, great investors also change their minds. When the facts change, they change.
Yeah.
So for him to have bought Bitcoin, I'm sure it's not a huge position. He said he's got a much bigger position in gold. It's an unbelievable endorsement that this is a real product. It's a real macro weapon. And so it should be the leader. It should be the thing in most portfolios. In some ways, the story gets a little boring, right? It's one piece of the revolution. But in a lot of ways, the real revolution, which is coming in 5 and 10 years, where we rebuild the whole architecture of the financial system, that's the Ethereum revolution. Or maybe it's the Ethereum plus whatever.
Yeah, 100%. I mean,
If it's some of these other level 2s, or someone else is part of the level 1. I mean, I'm not smart enough to know how the whole pie gets put together, or call it I used to say it was the trust level, protocol. Is it going to all be Ethereum, or
yeah, we can't, in the Ethereum space, we kind of call it the protocol sink, and the heaviest, best protocols kind of sink to the bottom, and we'll have more layers built on top of them. That's the way we think about it. So I'm so on board with the thesis of Bitcoin is your blue chip, your cornerstone. Ethereum is a tech play. Bitcoin can still do a 10 or even 100x without changing. So I want to see it improve.
Bitcoin's finished. What's cool about Bitcoin, it's finished.
Yeah.
It's a finished product.
Yes.
Where Ethereum, we're in inning 2.
100%. And I completely agree. Yesterday, I was just shocked when Stan Druckenmiller just dropped that casually in an interview. And I went back and I sort of watched the clip a few times. And I'm like, he is insinuating that he owns crypto. It's almost like Warren Buffett changed his mind on gold, like you said, without directly ever saying so. And for Stan to change his mind, I just think there's a wall of money coming. I was speaking to an Aussie fund manager the other day, and he's just saying that it's still the arm's length is the money managers. They're not quite educated yet on how to get their clients in. So it's all about education.
Yeah. So I would tell you, so Galaxy Digital, we're a public company. We trade in the Toronto stock market. We're about $1.2 billion market cap. We own Bitcoin. We own Ethereum. We have a huge venture portfolio. And we have businesses. We have an investment banking business, a trading business, a mining business, a venture business, an asset management business. But we did a capital raise recently. And one of the interesting things was one of our investors was the New Zealand Superannuity Fund. And I'm like, it tells you who, there's a shift in mindset of institutions. Those guys are cutting edge. I would tell you there's not a lot of institutions in yet, but they're all getting to the starting line. I used to say the herd is coming. I was 2 years too early. I really was, maybe 3 years too early. And I was semi-frustrated and almost pessimistic last October, November, December. We built this institutional platform and there were no institutions. And COVID changed everything. Yeah. It literally changed everything. And overnight, the macro story for Bitcoin became an unbelievable story. But just as importantly, the acceleration of the digitalization of everything, right? Central bank issued digital dollars, which are coming.
Yeah.
The whole psychology of we need this new financial architecture shifted. And so now I can't hire people fast enough. mad at myself for having fired a few people.
Mm.
We're seeing, I get 4 calls a day. Wealth management departments at the big banks are all shifting. Okay. And so you'll see almost every financial institution in the world within the next 24 months participating in some way or the other.
Yeah, I had a chat with a friend the other day who said Australia's wealth fund looking into it, but that's probably still 12 months away. And it's just so funny being here 8 years, or I think you've been similar as well, and just watching it unfold, but it's in slow motion. You kind of know these things are going to happen, and it just feels like slow motion. In that,
I tell you, they're going to happen, but it feels awfully good when they do happen.
oh, it still does. It's that redemption when the maxis are beating on you when ETH is $80 and I'm putting up tweets about why it's not dead and stuff like that. It's all part of the fun, isn't it?
Yeah. I find that the whole maxi thing. I mean, listen, full disclosure, I'm about 85% Bitcoin in my portfolio and 15% Ether,
Yeah.
something like that. During 17, I made a lot more money on Ether than I did on Bitcoin. And so I put my money where I think the best risk-adjusted return is, and I'm not as religious as my friend Joe or some of the Bitcoin maxis are.
No.
And I do, like I said, I think the real revolution, which changes the way businesses operate, which really benefits the public, is going to happen on the Ethereum blockchain.
Yeah, we've just finished making a documentary, and it was so big and so long. We're going to turn into 3 parts. So this is with Real Vision. So Raul and I, it's got Vitalik in it. It's got Joe Lubin in it. It's going to be out in the next few weeks. It's going to be awesome, and we want to explain Ethereum to people because it's still misunderstood.
Raul has done a great job of, I'm not sure if he got on the train late, but whenever he got on the train, he became an amazingly articulate spokesman.
Yeah, so Raul and I have become good friends, and they set out with Real Vision to democratize finance. And then he sold his crypto in 2017 because he didn't understand the forks. And then I kept nudging him. I'm like, you got to get into Ether as well. And he's come around. Good investors changed their mind. And now they're democratizing kind of this understanding of crypto and all the other aspects of finance, which I love. And he's done a good job because people look at a guy called Nugget on YouTube. People look at Novogratz, he's shilling his crypto investments. But it's now we've got these legitimate guys, Paul Tudor Jones.
You're telling me you're saying Raul's more legitimate than I am. Come on.
Oh, more legitimate than myself as well. Nah, you know what I mean though? Like, you can't ignore Paul Tudor Jones and Stan Druckenmiller. And now we've got these other guys. It becomes real for a lot more people, doesn't it?
Yeah.
What I was going to say next was so my investment thesis, like I said, mainly Bitcoin and Ether, and then I'm happy to plant seeds, I call it, little 1% investments in good alts and early stage projects. I'm trying to sell them when they do between 10x and 100x. Those returns are just crazy to even say that is possible, but it is possible in the crypto world. Yeah. A lot of good projects went down 99%. So I know, and Galaxy or yourself as well individually, talk us through a few of the ones that have been bad, because I still like projects like Funfair and Wax. I know a lot of funds sold EOS. They're excited about EOS. Do you want to talk about maybe that, the good and bad?
Listen, I was in Funfair. And I love the CEO. I love the idea. I sold it all because it went up high. Like in that 16, 17 zone, I was really cynical. And my guys on the desk, but you can't sell. It's a good project. And I was like, it's my goddamn money. Sell. Yeah. And I would have to literally stand over them where they wouldn't sell because they believed in the space so much. I was like, this is not a religion to me.
Yeah.
Same thing with Wax. William Quigley's a freaking phenomenal CEO. We were one of the largest owners of Wax, and unfortunately, when it was way up, they didn't have enough liquidity to sell enough.
Yeah.
And we stake it now. We've done all right. It's been a fine investment. A lot of these things are hard to build community in, right? If you think about so let's think of crypto this way. So you have Bitcoin, which is just a store of value, and so what a store of value is a social contract between me and you, and me and the next guy, and you and the next guy. Right. What's so unique about Bitcoin is we now have close to 100 million people that are part of that social construct. I think outside of fiat money, it's the largest distributed asset ever.
Yeah.
Think about what I just said, the largest distributed asset ever, right? Apple stock's not owned by that many people. And now you have 15, 20, 30 billionaires that made their money outside of crypto that are participating. Abby Johnson, right? Paul Jones, Stan Druckenmiller, Bill Miller, Pete Brigger, Mickey Milker, Wences Casares. I can just keep naming guys that were credible investors. I was in a fight with Charmaine Masranjani, the Goldman Sachs wealth strategist, and I was like, who do you need to say it's a store of value for you finally to believe it's a store of value? Does Alan Greenspan have to bless it? Does at what point, when is enough enough? I would argue that we've crossed the Rubicon, that it is a store of value. And I think that's becoming solidified as thought this year. A lot of the smaller cryptos don't have those communities. If you're Bitcoin Cash, you've got Roger Ver, who's charismatic and believes in it. But you got one guy that's trying to constantly puff it up and try to create the environment. And it's a miracle it's lasted as long as it has. Or Bitcoin SV or
Litecoin,
Ripple, or Litecoin. Like I once tweeted, Litecoin's a poor man's Bitcoin, and I got death threats, and I was like, it's a glorified test net. And there's a Litecoin community. It's small, but man, is it fierce. It was like killer bees. I was like, leave me alone.
There's a reason Dogecoin is worth hundreds of millions of dollars. It's community.
But there's these small communities that can maybe, because they don't have huge mining costs, maybe keep some value in their community coin. I don't see any of those growing.
Okay.
I just don't. I see them all slowly shrinking down. Now, then there are coins like Uniswap or YFI, where they're really synthetic equities in some ways, right? There's a dividend, there's a community mechanism to change governance, there's a community mechanism to change the dividend. So I think 5 years from now, when you look at the top 10 coins, other than Ethereum and Bitcoin, none of them exist, in the top 10 today.
Yeah, I agree. I think
that you're going to
in 2017
see things that look more like equities.
In 2017 everyone had a token, and no, that was the bubble, and then everyone was disgusted by tokens in the crypto winter. But then what changed was the tokenomics, and you saw Aave, Synthetics, the good projects come out. Nexus Mutual, they came out with good token models, and we started having yield farming, staking, rewards, good incentives, and it wasn't just it's the currency of the platform. That's no longer acceptable, and so I think that
I always say this: when you look at the periodic table, how many elements are there?
Or 130 is there?
114.
Okay, close. Yeah.
I think you might want to Google. I think there's 114. One has store of value, gold. Every other element is valuable because we use it. Even silver, the number 2, has huge industrial use cases.
Yeah.
Right. And listen, when I think of Ethereum right now, people say, well, it's silver. I was like, yeah, it's more like oil. It's trading like silver right now. Right, it's got a $50 billion market cap based on this idea of network effect. So it's a little silver, it's store of value. But in the long run, it's going to trade like oil. It's going to be this fuel you use to power this giant. And I think it's valuable because if everyone starts using it, they'll say it's valuable. And so it'll keep some store of value. But all the other stuff really are going to need to have use cases.
Yeah.
And that's why I'm much more excited about things where I can, I've recently bought a bunch of, what the heck's the name of the name of coin? I've just lost my mind.
What does it do?
It's a Korean payments, like a credit card company almost.
Not Swipe or.
No, it's all in Korea. It's a stable. They have a stable coin that they use for discounts on shopping.
I'm not sure, but I agree. The top 10 is going to look completely different. These ghost chains that are worth $1 billion compared to the activity and the users and all that on DeFi. So with Ethereum, are you sort of saying that I definitely think it's going to make new all-time high? So I think the driver is going to be this fee burning, the EIP 1559, how they're going to start burning all the fees, and it's going to become deflationary. It's going to have a better stock to flow than Bitcoin. I think the staking and the yield in a negative interest rate environment is going to be attractive. And I just think it's got a couple of different aspects. Proof of stake as an ESG theme narrative is going to be attractive for funds. So do you see those things coming together, or are you saying that you don't think Ether is that attractive compared to... I think it's going to outperform Bitcoin still.
Listen, I like Ether. I think it's going to go higher. I think what's going to drive it more so than even those dynamics is you're going to see one of the major credit card companies in the next, so I don't know how many months, announced they're going to build a level 2 solution on top of Ethereum,
Yeah.
because it makes sense. And then the second credit card company will do it. And then they're going to have credit card banks that are, and so the whole stablecoin world is going to get built on Ethereum, most likely. And so as every central bank starts looking at, should I do my own, like even look at Libra, the decision for Libra to do their own blockchain, I'm sure they're scratching their head right now and say, why do we do that? It's complicated, it's expensive, this one works better. And so I do think you're going to see more and more projects migrate there, even if it doesn't work fast enough, not even close to fast enough. You'll put a level 2 on it for a while, you'll wait. But
Well,
that's what's going to drive the attention there.
exactly. And I think, did you see, I'm not sure if you saw, I tweeted a couple of days ago, Uniswap layer 2. So Arbitrum is the scaled version of Uniswap. You've got Synthetics, which, the top blue chip ETH projects are only now weeks or months away from scaling. And I think that really changes everything.
Yeah, no, I listen, and I was funny because I float at 60,000 feet. I've run this company. I'm on freaking TV talking about Bitcoin. I've got a criminal justice division in my philanthropy, and so sometimes I'm not deep enough in the weeds.
That's all right.
And
I know you're busy.
when DeFi started happening, I was like, wait, DeFi. I was like, this is not. It doesn't need its own name. This is what I was talking about 4 years ago. This is just taking a blockchain and putting it to the financial services industry.
Exactly.
Like I'm thinking it's going to be 60% of what the blockchain does actually. Yeah, there'll be other use cases and supply chains and whatnot, but it's really the revolution is going to happen around the financial services industry.
I agree.
And so I kind of dove back in and had some things in the portfolio that you'd put in there years ago that were starting to kick, but had missed a little bit of the 18-month earlier vintage that was kicking in.
The alpha, yeah.
And I was like, how did I freaking miss Uniswap or YFI? And so I started putting some money in, not necessarily at great levels, but I picked a few of them that I thought are core, and didn't sell them. YFI went all the way, whatever, 7,000 a couple nights ago, and I
was shilling Mike our research in the pre-interview, and we put out our research report on Wi-Fi before it was released, Mike. So there you go. It first traded at $3. Did you know that?
I didn't, and I wish I had bought it at $3.
A 10,000 bagger. So that leaves ETH in the dust at 1,000 bagger.
Yeah. Wow.
Anyway,
yeah, no,
I was going to say I think they're about to have another run. I don't think the run is done in the DeFi and the blue chips. I think they're about to have another run.
Yeah, no, I'm excited about the space. And again, I've got about 5% of our capital in the space, so it's not 50. Just because it's on a risk-adjusted basis, Bitcoin still seems like a pretty straightforward bet, and it's the bet that all our institutions are looking at.
I think where else in the world, you look at the S&P and bonds, and where else in the world do you say there's a pretty good chance this thing does a 10x? And when you've got a lot of wealth behind you, you don't need to risk more than that, do you? Like, that's kind of the message, and that's why Bitcoin is still such a good risk-adjusted bet.
I just remembered my Korean bet. It's the stablecoin is called Terra, and the underlying equity token is called Luna.
Oh yeah, Terra. Yeah. Okay.
Do some homework on it, and you're gonna like it.
I know Terra. Yeah.
I like the guys. I like the idea. And when I first met them, I was like, "That's a really cool idea," but I'm not sure you're gonna be able to pull it off. And then they kind of pulled it off.
Yeah.
And so we'll see if it scales. But the Koreans are maniacs around tech and early adoption and
absolutely
and crypto. So
absolutely. Well, I'm just trying to think anything else that you want to touch on there in terms of that story of ETH, Mike, over the years before we kind of dive into the current state of things. Oh, I do want to mention STOs. So that was another one that I got pretty excited about that, but it just didn't catch on. I think everyone moved to these jurisdictions, and then the jurisdictions didn't give licenses, and I think that really stonewalled it.
The regulatory. I mean, we're a U.S. based company, and we're a public company, and I'm a rich guy, and so we have been more cautious. I've got a sign on my wall that said, "You're too rich to go to jail." And what it's always meant is, don't take stupid risks. Don't take tail risks on your reputation. Don't take tail risks on your company's reputation. Now, listen, when you're on your way up and you're young and you're hungry and you're scrappy and you don't have a lot to lose, people will take more risks. And so it's not meant to be as arrogant as it sounds. And so the STO thing didn't take off because the regulatory environment isn't there yet.
Yeah.
It's getting there slowly. And there's some, jurisdictions that are much happier to operate it in than others. We are watching with bated breath on how this new administration, who gets the SEC role, who gets the Secretary of Treasury role, who gets the Officer of Controller of the Country OCC role.
Yeah.
I would tell you that in general, it's moving in the right direction.
And are you one of these people that thinks, everything is going to be tokenized, and or is it very few things going to change, and a lot of it's going to happen behind closed doors in terms of this digital securitization of everything?
Listen, the banks have a lot to lose, and so they're going to fight and they're going to participate. The tech companies are the ones that are going to be the big buyers of, you saw PayPal, right? Yeah. You watch what PayPal, they're going to suck up someone to do custody, and they're going to buy the domain expertise because they know how to eat themselves much more than the banks do.
Yeah. And
so I think that you're going to see, at one point, DeFi is not going to be called DeFi. It's just going to be called, fintech.
Yeah.
And at one point for the consumer, this is all the back of the fucking TV. Excuse the language. Right? Who cares about the back of the TV? I want to understand, what my fee structure is and what my user interface, my user experience is.
Yeah.
And so for nerds like you, it's fascinating. But for the general consumer, it's not so fascinating. It's, do you have a better product?
And I think that's another, I guess, where the space is at the moment. Whether you talk to Jez Sand at Funfair, and he's really excited. Next time I talk to him, he says, you know what, we couldn't get customers and onboarding and MetaMask, and we didn't think about it. There's a lot of tech guys and smart guys that haven't thought about the marketing, the front end, the user experience. And that's kind of where we're at now, I think, isn't it?
Yeah, no, it's hard. What attracts customers, right? That's the hard gig. And so in some of these things, what's been cool about DeFi is the economic incentives have worked so well, and it's all been done within community, right? It's like an experiment in a sandbox.
Yes.
Right? But it's a big experiment in a big sandbox because the crypto community has become bigger and bigger. But they've been experimenting with ways to get customers, and whoa, did some get customers quickly.
Well, the Aussie guys, Synthetics, were the pioneers of yield farming before it was called yield farming. They started this idea of staking and building community, and now everyone's doing it, and it has worked well. But we're waiting to see if those liquidity locusts are going to hang around and have any loyalty, or how they're going to keep people excited when those high yields die down.
I have some synthetics in my portfolio. I'll give you. It's one of my 5 kind of core.
There you go.
DeFi projects.
Yeah, giving people some alpha there, Mike. I'm going to give you a couple of hidden gems after the interview as well. But so the thesis around Bitcoin, I think it has changed a little bit from the payments, and the Lightning and all that has really fallen behind compared to ETH that has pretty much scaled or shown us what it is going to do and how it's going to scale. Yeah. As you said, it's a finished product. Bitcoin's still a finished product. But what's happened recently is the acceleration of the money printing and all that, but it's worked its way to the US and Australia. So there's these countries where you could still get 2 or 3% on a bond, and there's no negative interest rates. They weren't printing money. But once you work your way up the food chain, so it's not just Venezuela, Zimbabwe, it's, oh shit, this is in every country now. And Michael Saylor's on Twitter saying, unless you're getting 22% a year now, you're behind. And so that has started to click with people. And when they say, I'm going to sell my Bitcoin at 100K, I'm trying to tell people, well, if the Fed print 25% more money that year, it's probably going to go to 125K next year, all things being equal. So you've got to change the way you're thinking about why you're invested in Bitcoin. Any thoughts around all that?
Yeah, so, it was funny. I am a trading junkie. And, up 8%, I'd sell and buy it down. And this year, literally right after the crash, I bought some more. I bought a bunch of Mt. Gox claims, which is just a cheaper way to buy Bitcoin.
Yeah.
And then I said, you know what? I'm changing my stripes. I'm becoming a hodler.
Yeah.
And I laughed at myself because I always thought hodling was an idiotic term.
Yeah.
And, I made more money selling than buying in 2017. I thought, that's my genius. I know how to sell, and no one else did. I remember when I sold Ether at 350 to buy a jet. Brock Pierce gave me so much shit. That'll be the most expensive jet you ever bought. And it went up. It was a very expensive jet. Then when it was down to 80, I was like, I'm feeling pretty good in the jet. You know?
Yeah.
But my mindset was that of a trader. And in Bitcoin, at least this year, I was like, you know what? I'm not going to trade it. I'm going to just buy more. I'm going to hodl it because I really believe something structurally has shifted.
Yes.
That this adoption curve is accelerating, that I see it in our position. I see it because I get calls that we're doing presentations to banks, insurance companies, high net worth customers, hedge funds. And so I see the pipeline. And I talk to my friends who run similar businesses, right? I talked to Ross Stevens at New York Dig. He sees the pipeline.
It's so funny. Just sorry to jump in, but exactly the same. I'm having phone calls with these high net worth people, and the first thing they say is, I wouldn't normally buy Bitcoin, but, and they sort of say this year things have changed. Yeah.
Yeah. And so listen, part of it is everyone has a little FOMO, but most of it is we have such a bizarre macroeconomic environment. When I say that, I'm 55, 56 in a month, which really pisses me off. And my whole life, and I've been an investor since I'm call it 24. So what is that? 31 years as an investor. My whole life, I grew up in an environment where the central bank had independence from the Ministry of Finance or the Treasury Department. Yeah. And now they don't. And so it's the first time in my life, first time in Stan Druckenmiller's life, first time in Paul Jones's life, where we're in this new paradigm, this new regime. And because of it, it scares everybody. You don't know what to expect. You know, Raoul Paul thinks rates are going to go negative. He might be right. We haven't had negative rates in the US. One conspiracy theory, or maybe not conspiracy theory, of why everyone's rushing to central bank issued digital currencies is because once you push everything to digital, it's really easy to go negative. Right now, it's hard to go negative, right? I'll take my money, I'll put it in my basement and hire two guys with, Uzis to protect it before you charge me 3% to
cash issuance is at record levels in Australia because of that. They're fearful of negative. Yeah.
And so, but even the fact that we're having those conversations, something is shifting. And so I do think there's a macro backdrop it's not just a tailwind. It's like it's like a mini hurricane blowing at your back.
Have you heard this thesis that I've been joking around with? You're familiar with the US dollar milkshake theory, and the dollar's going to get stronger, that Brent Johnson and Raoul and those guys talk about, that the world needs dollars and whatever. So I have this theory that the digital rails are going to completely change all that, because you don't need central bank swap lines to other countries when everyone's got a stable coin on their mobile phone. Everyone can access dollars anywhere in the world. So the US reserve currency system all changes once you've got that system. But what I think is changing now, the war for control of money, Trump and governments around the world, whether it's China and the digital yuan, they're realizing that they can actually issue currency or spend money into existence. And central banks are kind of realizing that maybe they don't have a lot of power. And then you've got the commercial banks. Jamie Dimon wants to launch JP Coin. And if central banks launch their coin and ledger where they can go directly to you and me, then the retail banking system, they're going to have their lunch eaten. So you've got this war for control of money, but then you've also got this crypto world that's a better system, and it's way more for the people. So that's kind of the dynamic.
I think you're going to see, let's separate these two things.
Yeah.
So if the huge efficiency gains for having a blockchain-based system to run money on is one story, and every central banker believes it now.
Yep.
So that's the primary issues for a central bank issued digital currency is the democratization of finance, like cutting out all these fees, making things more efficient.
Being able to give a $1,200 stimulus check straight to the people. Yeah.
And so in the US, they're not going to issue it right from the Fed. They're going to give a set of rules. Here's the guidelines. You got USDC, and you could have 7 other stable coins. They've got to be, the deposits have to be left at whatever, a Fed bank or whatever. But I don't think the Fed's not going to become a technology company. In other countries, they're going to become technology companies, right?
I think they're going to make the banks do a bit of work for them, as in being customer and retail facing. But I do think the Fed are going to issue directly to people because they can't get inflation. And this is where maybe
I disagree with you.
Okay.
I only say that I was literally just talking to the controller of the currency who's been pushing this there. Uh,
Okay.
this is more. This is not what they should do or shouldn't do. This is what the U.S. is on track to do. And so I wish I owned, USDC right now.
Yeah. The company, not the coin. Don't invest in a stable coin, guys.
Yeah. I mean, Jesus, but the company, right? I do think the stablecoin business is going to boom, and I don't think the Fed's going to want to actually issue them themselves.
Maybe in China, maying the digital yuan, they're airdropping to citizens. That's different.
100%.
Yes.
And I think different countries will do different things. But that's a story. Listen, money by definition is political. I'm in charge and I want to spend more, right? What leader doesn't want to spend more money? I'm going to build you a bridge. I'm going to give you a diamond ring.
A wall.
I mean, look at Trump. He was supposed to be a Republican. He spent money like a drunken sailor, just like he did when he was a casino operator, right? He was running a 5% budget deficit before COVID. That's insanity, right? We had the greatest economy of all time, yet we're running a 5% goddamn budget deficit. That is the definition.
You've mentioned politics. You've taken the video from 100% thumbs up down a few notches, I reckon.
The crypto community likes me for crypto and they hate my politics. It's really funny.
Yeah.
So many, I must have had 10,000, more than that, comments over the years. Dude, more crypto, less politics. But money is political. What's genius about Bitcoin is it's its own sovereign. It's apolitical. And so there's two decisions. One, are you going to have a more efficient money? Are you going to put your money on a blockchain? I think that's going to be yes everywhere. Two, are we going to allow these other systems to flourish? Will people be able to choose between the money you issue and another money? I don't think Bitcoin will be used as currency because if it's a store of value, I'm buying it because I think it's going higher. So why in the hell would I buy my tennis shoes with it? Right? And so I do think people will use it as a piggy bank to put their savings in, and more so, right? If you were in so many countries, look at, we haven't hit all-time highs in Bitcoin yet. I'm going to get a moon tattoo right there when we do. But we've hit all-time highs in Brazil and Russia and Turkey and tons of other currencies.
Gold's nearly at $3,000 an ounce in Australia. People forget that, yeah.
And so I do think there are going to be separate discussions. And, I don't think the US dollar is going to become toilet paper in the next 2 years. I don't. We have smart people that, will be put into the Ministry of Finance and the Treasury Department and the Fed. And, we're a long way from that Minsky moment where things just go.
Yeah, that was like a mistake or something I learned early on when you're in the gold and silver bug crowd and you're waiting for the world to end and waiting for the US dollar to go to zero. And then you realize, well, what's the euro and the Aussie dollar going to be the next day? They're all in the same trouble. It's the cleanest dirty shirt in the laundry sort of argument. So one thing I think also that's changed is the idea that other countries are getting a little bit kind of frustrated with the US dollar reserve system and the privileges they get. And it's no longer Russia and China. It's now Bank of England and those guys as well. But what they're all saying without noticing it is, we need a new system that's, like you just said, apolitical. And all of them are outlining the bull thesis for Bitcoin without kind of knowing it yet. So that's where I see it turning into like, well, maybe China and Russia and countries have a bit of gold, then they have a bit of Bitcoin. That's where I see it all going.
So it's so interesting when you think about reserve currency. So he who controlled the seas controlled the reserve currency, right? So it was the Brits and the US. We were spending close to 5% of GDP on the military, where the next highest country was 1.5%. And so you don't get the reserve currency for nothing, right? 5% of GDP. Today it's about 3.5% of GDP on our military. So that's still, close to $1 trillion, right? 800 billion on the military, right? So yeah, 3.5%. It's a staggering number.
It hasn't gone down though, has it? Everything else has gone up. Military spending. Yeah.
So military spending is at a high, but everything else is high. It used to be 5%, now it's 3.5%. That went down. There was the kind of the peace dividend, and then Obama took it down some. And so for us to lose reserve status, partly is, U.S. pulling back in, right? Trump was an isolationist, and he was using our SWIFT system to punish people and get politics. It'll be really interesting how Biden approaches things. My sense is Biden will not be an isolationist. He will work really hard to repair relations around the world. He will soften up with China, though he'll still be tough. And you might see that thaw a little bit.
Yeah.
And they don't want, they're very scared of China, and they're scared of this digital RMB. And so one of the reasons we're rushing with this central bank currency, it's a national security issue.
Oh, they're the duck that's paddling underwater and saying we want to get it right. It's important to get it right rather than to be first. But at the same time, they're thinking, holy crap, you know.
Well, what's funny is politics are funny because you get new people in, and it takes them a while to get educated and smart. I spoke to a very senior person in the administration a year ago, and he was like, people want their money out of China. I'm not worried about China as a competitive currency. And I'm like, you should be. And a year later, he is worried. Listen, there's still a tremendous amount of money that wants out of China.
Yeah.
A tremendous amount. Right? You don't have Americans that are saying, I got to open an account in China. But you have a lot of Chinese that want to open accounts in America. That might change in time. And I'm sure the tensions between the two countries, unfortunately, it probably changed some this year. The bigger worry, though, is Mideast, Africa, Latin America, where right now it's the cash dollar, right? I reach my hand in my pocket. I always pull out a bunch of hundreds because I love carrying hundreds, and there are more hundreds in circulation than ones.
Yeah,
think about the more hundred. This is the savings of most of the world.
Yes.
In the crummy places, in Iran and Venezuela, this is what they transacted. This is what they hold their savings in. And so that's why Bitcoin does well in those places.
But make it die, and the stable coins also do well in those places.
A dollar stable coin. When Libra was launching, they literally thought their dollar Libra would be the thing that worked, right? Because people will hold their money in dollars still. And so I think getting out there and having because listen, the renminbi has been stable as heck versus the dollar for the last 15 years. And we might say, it's moved 3%, but 3%, who in the hell cares, right? And so if you're in Iran or Venezuela or Botswana or 150 of the 186 countries out there, plus or minus 3% is as stable as can be.
The Aussie dollar was $1.10 when I bought Bitcoin. And it got down to 55 this year, so that's a 50% crash.
Yeah. Wow.
Yeah.
That's big. All right,
Mike.
What else can I do for you?
I think we've touched on most things. I mean, I've absolutely loved it today. I'm just having a quick look through my list. So other narratives that I really like. You mentioned the democratization of finance. I think that Web3, so building the whole stack with your file coins, your processing, rebuilding the internet, the hardware as well as the software, I'm excited about. And then NFTs in gaming. You've got your kids you mentioned. You understand the gaming world. You're bullish on virtual reality and online and all that space, or?
We have a fund. We have a big $300 million fund that is called Galaxy Interactive, and so we are one of the largest investors in the world in gaming and virtual space. My wife's actually doing a virtual reality app for meditation, which is pretty cool.
Awesome.
I personally kind of left gaming with Breakout. It was called. You had Pong and then Breakout. Asteroids. And so it's funny, I sit there and listen and I completely buy in. I just took a stake in a company called FaZe Clan. FaZe is a cool, brand. They've got all kinds of gamers.
Yeah.
And I see it happening, but I don't have the patience to kind of go and figure out how to play. I went to an esports big tournament and I was like, I was excited to see the energy of the crowd and I understand the kids are all doing it, but it just didn't.
Have you ever got the VR headset and mucked around in anything?
Oh, I love the VR headset. The new one especially,
So one of my big bull theses is Decentraland. The guys at Grayscale are behind that as well. I think we're going to start having these virtual business meetings. I think if you have round 2 of COVID, all of a sudden you have the NBA in Decentraland and everyone has the best seat in the house. Everyone has front row courtside seats. So I think that's got a huge narrative behind it.
Yeah, I'm not positive I 100% agree with you. I'm not sure who wins in that scenario. What company? I mean, listen,
Oh, it
I
could be
would
all of them.
not,
Yeah.
I would not fight against Oculus. Uh, like they got Facebook, they're smart, they're giving out grants to anyone developing on the thing. Uh, it's a hardware game first to some degree, and they're going to control what goes on there.
Yes.
Uh,
So you're not really bullish on like you haven't bought any digital land or digital items, collectibles, nothing like that yet.
we invested in a company that was, what's the heck the name of it?
A crypto one,
Yeah, it was the,
Sonium Space Sandbox,
no, I'll think of it in a second. Um, so the original virtual world, uh,
Decentraland.
no, way before that, 20 years ago,
Oh,
uh,
20 years ago. Oh, sorry, I don't know. No.
still exists.
Oh, The Sims, or
Right after that, right around there. I can't believe I can't think of this. I can't think of the CEOs. It was driving me freaking insane. I know the guy. He's a wonderful guy. Uh,
it'll
hold on.
come.
Just me 10 seconds.
It'll come to us.
Um, it's embarrassing. I can't remember. I think I'm not even 56 and I'm
Well,
already
while you're
losing.
thinking about it, the last thing that I do want to touch on is a little bit esoteric. I think I like the fact that you mentioned that you're a psychedelics guy. You just mentioned your wife's got into meditation. They were also things that really shaped my journey. So yeah, talk to us a little bit about that. I mean, I've had some fascinating chats over the years with Vitalik's dad and other people, and I find that it's not maybe the Silicon Valley, the young guys doing mushrooms in the desert to.
So that's my spirit animal.
Okay.
I got that about 18 months ago after I did a week-long journey doing ayahuasca in Costa Rica. I used to think my spirit animal was a dragon, but it actually is a black puma. Um, Listen, I invested in Compass Pathways. I was the first investor alongside Peter Thiel and Christian Angelmeyer. I met this guy, George Goldsmith. It's become a fantastic investment. We got in like a $10 million valuation. Now it's $1.3 billion or something. And that coincided with my wife's journey into spirituality and shamanism, and I had done mushrooms in college like every other knucklehead, but I hadn't really used psychedelics for the journeying and the healing sense,
They're a
and
tool.
have
Yeah. They're not a party
and
drug, they're a
literally
tool.
have been a complete buyer of psychedelics for depression, for addiction, for empathy, for self-expression,
Yes.
and so have been a philanthropic funder of the space, have been an investor in the space. I'm the second largest shareholder of a company called the Thai Life Sciences, where we own 25% of Compass, which is psilocybin, but we also have investments in ayahuasca and ibogaine and arketamine and about six other, plant-based
And
and
you know the
synthetic.
guys at Maps that do their work as well? Yeah.
I know the guys at Maps. I love them. I was just out with one of the women there, Leanna Gilliguli, for dinner last week. Listen, I think it's a really important space. I gave a graduation speech at the University of Iowa 18 months ago, and I sat up there in front of 3,000 kids, and I was like, you need to be the first generation to destigmatize mental health. And I talked about it, and I was like, listen, you've got these new tools, psilocybin, ayahuasca. They're actually tools in the toolkit that you can use. It is going to revolutionize how we think about depression and mental health.
Yeah.
If I had a depressed son or daughter or friend, uh, I would have them, and I don't say this as medical advice, so I don't get yelled at, but I would certainly have them explore and really think about doing a psilocybin
Well, you can do it
treatment.
professionally. You can go and do a proper session. We're not telling people to buy this stuff off the web and go do it at home, but yeah, you can
Yeah,
do it
and
properly.
so it's not legal in the U.S. yet. It's been decriminalized in Oregon. We are in class two trials at NYU and at Harvard and at Hopkins. And it's a little bit like crypto. Everyone thought I was an idiot when I invested in crypto. Not everyone, not the crypto people, but like the non-crypto people. Like, what are
And
you doing?
marijuana. It's a little bit like marijuana. It's just going to take some time.
And I like to think I'd rather look stupid than be stupid. And so I was lucky enough to get in early. I've made a lot of money, but more importantly than making the money, I've like been helping in part of this revolution in mental health, and it just feels good because I know I'm right. Uh,
Oh, yeah.
and every once in a while, you're right. Right now, I feel like I know I'm right on Bitcoin, and I know I'm right that the psilocybin for curative purposes, for medicinal purposes, it's really going to be revolutionary.
100%. Like with the being a pharmacist and just looking from start to finish at how the antidepressant work and just seeing how the psychedelics, where it's all going, I just couldn't be more bullish on it as well. I wish there was more ways to get exposure to that narrative, to be honest. Um, I think the other thing, just to tie up here, there's people that have got a lot of money behind them that can fund things like maps. There's guys like you that are getting behind these philanthropic investments compared to a generation or two ago where the wealthy guys were the oil oligarchs and the bankers, and they're not thinking out to the left or right too much. I just think that that's it's a generational shift that we're the guys that have grown up with the internet, and there's lots of good things happening in the world.
Listen, you hope so. And so I've studied in my sister runs a thing called the Acumen Fund. And so she's been in the middle of philanthropy for a long time.
Yeah, I know that. Yeah.
And I've been around this philanthropic community. Stan Druckenmiller, is a great investor. He's an amazing philanthropist. Paul Tudor Jones, an amazing philanthropist. So they've been role models for me. Matter of fact, the day we took Fortress public, I went to a benefit and I ran into Stan, and he came over and said, "All right, now that you're rich, I expect you to give a lot." And he's like God. So he says, "I expect you to give a lot." You're like, "Yes, sir. Yes, sir." That's not the case for everybody. And so when you leave the United States, philanthropy collapses, right? There isn't big philanthropy in Europe. There's not big philanthropy in Asia. There's not big philanthropy in most of the world. Warren Buffett and Bill Gates and George Kaiser with the Giving Pledge did a lot to try to shift the mindset. But people have a really hard time with money, letting go of it. So people say, "I'm going to give all my money away before I die." And you're like, "Dude, you're 94. You haven't given anything away yet. Like, start." It's really hard, that process. And so
I was surprised that you said that. Is there data behind that, or is that just not?
Big data behind it.
Okay.
Big data behind it. Okay. So the Giving Pledge people, they haven't given that much yet relative to what they have. And it's interesting how you think about it. I used to think I was very generous, and I gave to this and this and this. And one day I wrote down exactly what I gave as a percentage of my net worth, not what I put into a trust, what I actually gave away. And I was like, "Oh, it's not as much as I thought." And so that year I committed to 1%. Beginning of the year, write down what your net worth is and say, "What's 1% of it? I'm going to give it away to something." It was a much bigger number than I thought. I mean, versus what I normally gave. And this year I said 2%. And it feels painful because we're still in the accumulation.
Yeah.
What I learned is at 55. Now, what I also thought is, shit, if I'm an investor and I can't do 10%, I suck, right? And so if I can't clip an extra 2 and not care about it, then give my money to someone else to invest.
Yeah.
But it's also liquidity versus net worth. And so I thought a lot about, well, when you're going to have your pile go down. And for me, it feels like 55, you still want to be expanding. I'm doing new things. I want my pile to be going higher. It's just psychological. I would hope that by 70, your pile's divesting. But what the science says, or the statistics say, people just don't let go of it. And they often give it to second generation. Second generation kids, they didn't make the money, so they're scared to give it away. It's not mine to give away. I need it to leave my kids more than. It's shocking how many times I've heard this sentence from people that inherit money. "I want to be generous, but I need to live my kids more than I got." Like, why? Who died and made that a law? And so it's a psychology. So I have this real theory that if the guy that didn't make the money doesn't give a lot of it away, or put it into a foundation for his kids to give away, it gets stuck. It gets stuck, and they give some away. I mean, you look at the Walton family, the richest family in the world. They've been terrible philanthropists. Now they're starting to give a little bit more away in big numbers, but as a percentage of that fortune, minuscule philanthropists.
I think
the old man didn't give any of it away.
When you just look at the pension crisis and government debt, the whole idea of having all this money and living off 10% interest rates, that is just going to change. People are going to have to pay down their wealth just to live. I think that whole dynamic is going to change.
Yeah. No, what'll be interesting is we're in this. All the wealth of the world, I'm exaggerating, resides in, 45 to 85, right? The baby boomers, 55 to 85. They still have the bulk of the wealth. They're going to start dying in the next 5 years. And you're going to see the largest wealth transfer in history. It's one reason Bitcoin is very optimistic, right? Old people don't like Bitcoin. Young people love Bitcoin. And so that money gets shifted, it gets reinvested. I mean, you can see that in every statistic. You go on Square app or
The $1,200 stimulus check stat. Did you see the spike in Coinbase buys?
that was so funny. One of my favorite stats of the year.
Yeah, yeah.
And so, and I do think, you know, millennials more than any generation kind of got screwed. They got screwed like 3 times over. And so they're going to need that money in lots of ways. And so it'll be an interesting thing to watch. You know, they have less wealth at the same age than the generations before them. They got hit with, 2001 and 2008. And so they've been an unlucky generation in terms of wealth accumulation.
Yeah.
And so you're right, they'll need it. But I give that challenge to all your listeners. 1% until you're 55, and then 2% until you're 65, and then 3% until you're 75, and then whatever you want to give.
Yeah.
It's harder than you think, and it's a really good exercise. Even just, again, your total net worth and what did you give last year?
Yeah. We do a thing.
People that make less money actually are far more generous than the rich guys.
Yes. No, we've made a habit in our premium community. We give to a different charity each month, and the idea is to encourage people to at least think about doing it themselves, like you said. So no, I'm definitely behind that. Mike, that is absolutely fantastic. We've had great back and forth today. I've loved it. I think we've covered most of the topics I wanted to get through. Is there anything else that you want to cover, or any final messages?
I'm good. I love Australia. I've got 2 Australian goddaughters, Skylar Daffy and India Story. So shout out to them if they ever listen to your podcast.
Someone will know them. We've got 100,000 listeners in Australia. Someone will know them. Yeah.
They are both awesome young women. And so hopefully they're crypto. Their dads both like crypto. And I hope to get back to Australia soon once this COVID thing.
Well, I'm down in Tasmania, and I'll take you out for some of the best steak and seafood in the world.
I heard there's a great, great art park in Tasmania that I must see.
The Mona Museum.
Yeah.
Yes.
So that's on my bucket list. So
yeah.
I'm coming.
We'll go to that. Well, guys, I hope you've enjoyed that. Mike, appreciate you being so generous with your time, and we'll have to catch up again in future.
Awesome. Thanks.
Cheers, guys.